Hello and welcome to my channel. I'm Jaroslav, and in today's video we are taking a closer look at the recent movements in Evolution Gaming stock. If you are not familiar with Evolution, it's a Swedish company that provides online casino solution to other businesses. They specialize in live casino games and are widely recognized as the leading provider in this space. Let me walk you through how their business works using this presentation. So as we can see from this presentation, from this image, Evolution creates and produces live casino games, but they don't offer them directly to players. It's very important. Instead, their games are integrated into the platforms of online gaming operators. These operators handle things like player accounts, user interface, and security. So basically, Evolution supplies the games and the operators deliver the full gaming experience to the end user. So the important question is, what happened this quarter that caused Evolution stock to drop by 18% right after the earnings release? So we can see that the drop was significant. Yeah, it's now sitting at minus 18, almost 19%. Before I dive in, just a quick note. I'm a shareholder of Evolution myself, so please keep in mind that some of my views might be slightly biased. In their last quarterly earnings report, Evolution missed expectations on revenue, as we can see from this chart. Revenue grew by just 3.9% year over year. They wanted at least 10%. It was expected, yeah, because they've been growing their revenues significantly. It's growing company, and now it's reaching 520 million, while analysts were expecting around 544 million. Let's take a look at this chart. I want to show this because it's very important to understand the whole picture of the company. Over the past 10 years, Evolution has delivered impressive growth with an average annual growth rate of around 45%. That's massive. But what's got investors worried now is that the growth trend appears to be slowing down. Okay, so if we zoom in and look at it quarter by quarter, the numbers still show growth, but the trend isn't looking great, as we can see. The company is also dealing with some short-term issues, including cybersecurity threats in Asia and tighter regulations in the UK. Okay, I'd like to show you this presentation. I've prepared some points that I want to discuss with you. Let's take a closer look at the last quarterly earnings call. I've picked out a few key points I want to go over with you. The first one is ring-fencing and regulatory measures. Starting in February 2025, Evolution introduced new technical ring-fencing measures to make sure their games are only available through locally licensed operators in regulated markets, mainly across Europe. This move came after some issues in the UK, where questionable practices had raised concerns. Essentially, Evolution is now taking steps to prevent similar problems in other regions. So what's ring-fencing doing to their business in markets with strong regulation and high channelization, where most players already use licensed platforms? The impact has been minimal. But in markets when players are still moving from unregulated to regulated platforms, it led to a noticeable drop in revenue. From the company's point of view, regulation is a good thing in the long run, but they also point out that success in regulated markets depends a lot on factors like tax rates and how easy is it for players to access the games. Personally, I see this as a positive step for the future. I'd rather see the company address these issues now than face bigger problems down the line. Like what we saw in the UK, however, they contributed to a 6% revenue decline from Q4 to Q1 and overall flat performance. When it comes to cybersecurity and Asia impact, Evolution has been dealing with cybersecurity challenges in its Asian operations. The company has been the target of cyber attacks that disrupted its video streaming with unauthorized access to its content, similar to online piracy. The exact source of these attacks remains unknown. Evolution is fighting fraud by closing fake operations, removing shady partners, and working with honest ones. These actions have helped stabilize revenue in Asia, but there hasn't been any real growth for the past 3 quarters. We have to watch this. All these security efforts come with extra costs, which have put some pressure on the company's earnings in the short term. But we are talking about short term. Yeah, I'm looking in the long term. The important thing is their financial performance in Q1. Let's break it down. Okay, so as we have already discussed, net revenue came just in 520 million, up 3.9% year over year, over 6.1% when adjusted for currency effects. EBITDA was 342 million with a margin of 65.6%. That's at the lower end of the company's full year guidance range of 66 to 68, mainly due to the costs of ringfencing and cybersecurity measures. Operating expenses increased by 15% compared to the last year. This was driven by investments in new games, expanding studio capacity, and higher legal costs. Evolution has called 2024 and 2025 its product-led years, and for good reason. The company plans to release over 110 new games across its entire portfolio during this period. In Q1 alone, several new titles hit the market, including War, Racetrack, and so on, and all of these have been well received by players, adding fresh momentum to Evolution's reputation for innovation and engaging gameplay. I like to see that. Let's take a quick look at how Evolution performed across different regions. Europe had flat revenue growth overall, with a 6% decline compared to the previous quarter. As we discussed, this was mainly due to the ring-fencing measures, even though underlying demand remained strong. Asia saw modest year-over-year growth of 2.2%. Performance was held back by ongoing cybersecurity efforts and operational challenges, but revenue remained stable. North America continued to grow, delivering a solid 15% year-over-year increase. The region benefited from an expanding live games portfolio and strengthened partnerships, including a key collaboration with Bet365 in New Jersey. Latin America grew 9.7% compared to the same quarter last year, though revenue dipped slightly from Q4. Brazil's newly regulated market started off slow due to regulatory adjustments, but activity is now picking up. Overall, regulated markets now account for 45% of Evolution's total net revenue, with Brazil playing a key role in that shift. So nothing exceptional in this point, I would say, regarding growth. And what about management? What did management say about that? So, despite the current headwinds, Evolution's leadership remains optimistic. CEO Martin expressed confidence in the company's strong product pipeline and steady underlying demand, even as they navigate short-term challenges. Looking ahead, the company expects the second half of 2025 to be stronger than the first, and they're sticking with their full-year EBITDA margin guidance, and it's in the range 66 to 68. So, what am I gonna watch in the next report? So first, ring-fencing in Europe. It's already affected revenues, especially in less regulated markets. Now that it's fully in place, the key question is whether things start to stabilize. Next, we have cybersecurity in Asia. Recent attacks slowed growth, but management says their fixes are working. We'll be looking for signs of recovery in that region. Then there is a studio expansion, new facilities in Romania, Brazil, the Philippines, and so on. It can boost capacity. What matters is how quickly they go live and start generating revenue. We have to watch this one. Also, new game launches. Evolution is rolling out over 110 titles through 2025. If upcoming games like Sugar Color or Icy Fishing hit the mark, that could drive engagement and growth. And finally, financial performance. Revenue is still growing, but margins dipped due to extra costs. The company expects a stronger second half of the year, so that's something to keep an eye on. The important question is, so what am I doing right now? Personally, I believe this drop is an overreaction, and let's take a quick look at the financials to put things in perspective. So we can start with revenues. Revenue has been growing consistently. Just look at this chart, it's a clear upward trend and a sign of healthy business. What about earnings per share? Earnings per share also look strong, and with the company actively reducing its share count through buybacks, EPS should rise over even more since the same earnings will be divided among fewer shares. We can see also that their cash position is very strong. Look at this chart, it's beautiful. Evolution is in great shape here. They have more cash on hand than total debt, meaning they could pay off all their debt tomorrow if they needed to. And when it comes to share outstanding, you can see that the company has recently started reducing the total number of shares. Investors typically welcome this as it boosts earnings per share and makes the stock more attractive. And here's the big one. Let's take a look at return on capital employed. As you can see from the chart, their returns is on average above 30%. That's exceptional, and it points to a strong competitive advantage, or what Warren Buffett would call a moat. It's a sign that Evolution is not just profitable but also highly efficient at reinvesting in its business. So, as a long-term investor, I am not too concerned about short-term volatility. My conviction in Evolution's future and its potential for double-digit growth is based on several key factors. So, strong industry tailwinds. The global online gambling market is projected to grow at a compound annual rate of 11% through 2033. The shift from land-based to online gaming is still well underway across the world. When it comes to market leadership, Evolution holds a dominant position in the industry, as shown in this table. Yes, as shown in this table, estimated market share is around 60 to 70%. Their scale, cutting-edge technology, and regulatory expertise give them a strong advantage, allowing them to capture more than their fair share of market growth. Next we have capacity expansion. The company continues to invest in new studios. The recently opened studio in Romania and upcoming facilities in Brazil, the Philippines, and Michigan are set to boost capacity and support revenue growth in key regions. And we have also ongoing innovation. Evolution consistently rolls out new games and creative variants that keep players engaged and generate additional revenue streams. So, historically speaking, as we could see from the charts before, the company has shown massive growth. Should I sell just because of one disappointing earnings report? Personally, I don't think so, especially since they've otherwise grown strongly ever since going public. Even giants like Microsoft or Meta have experienced downturns, but that doesn't mean they are doomed forever. So, what about valuation? Is Evolution undervalued? Let's run a quick DCF on Qualtrim based on earnings growth. If we assume EPS will grow by just 12% year over year, okay, and that's me being very conservative. Look at this chart again. The stock still looks attractive. Just look at this. Over the past 10 years, Evolution's average EPS growth was around 50%. Yes, the growth rate is slowing, but even much lower number, like 12%, gives us solid upside. Now let's talk about PE ratio. I'd use 15 here. I used 15. And that's below the historical average. Right now the stock is trading at a PE of just 12, which is close to its historical low. So with those assumptions, we are looking at an expected annual return of around 20%. Let me put this number. Okay, my desired return is 15%. I'm aiming for at least 15% since I'm picking individual stocks and expect better returns than the broader market. So based on my assumptions, the stock can deliver 20% return from today's price. So to sum it all up, Evolution is facing some short-term challenges, but the fundamentals remain strong. With leading market share, a cheap product pipeline, ongoing expansion and solid financials, I see this dip as a long-term opportunity rather than a red flag. So for me, is a buy. So guys, if you find this breakdown helpful, don't forget to like the video, subscribe, and let me know your thoughts in the comments, especially if you are also following Evolution. Thanks for watching, and I'll see you in the next one.